Hey guys, welcome back to Ashram Hours Special Edition. Today we're going to break the floor. Or are we? I don't know. We're going to try. Everyone's here to try to break the floor. Having a floor price on an asset, it's not really been done well before, except for with Nirvana. And we love showcasing that. We did the first campaign just before I joined the team in April on the Nirvana app. And for the last, what is it now, 9 months, 8 months, you've been building Samsara, brand new derivatives exchange on Solana, trading exclusively in NAV tokens, which I'm really excited to unpack today. And I'd like to unpack it before. So there's some people in the Discord saying like, when do we start? When do we sell? I would say hold that thought. Let's coordinate it a little more on the stream, maybe a little preamble, talk a bit about what's going on here, because the benefits that come from this design are incredible. If you want, you can look at my Twitter at randomtask555. I wrote a big old post yesterday that really highlights the different scenarios, right? Market price up, market price flat, market price down, floor price up, floor price flat. There's only 5 things. And when you combine them in just that way, you get this really nice positive skew amplification on a token price performance. And so the idea is like, hey, I want to be long bonk. I'm going to go buy some. But I actually probably should have buy NAV bonk, because NAV bonk, the floor of NAV bonk will always outperform the bonk token itself. And you, Sid, the man behind the math, you actually added a really interesting feature today that we'll highlight on the stream as well. Specifically, I'm referring to that beautiful dotted gray line that shows the dollar price of bonk right next to the dollar floor price of NAV bonk, or whichever asset we're talking about. And yeah, just a beautiful capture. I got right into it. Good morning. How are you?
Good morning. I'm good.
You're on mute.
Wait, I'm on mute here.
Hello?
You can't.
Oh, you're not, but I can't hear you. Oh, I know what happened.
You're on mute, my friend.
You're not on mute. I'm on mute. The site I had, yes. Good old.
You know what? Let's get right into it. You want to just share your screen?
I do. That's a hot cue for the producer. We're going to get right into the screen share.
You framed it well, which is this is the dawn of a new derivative, or at least the next day of a new derivative. Ana being the first one, but this is the expansion. Derivatives always have a purpose. You know, there is spot, and then you have call options and put options and perpetual futures and this, that, and the other thing. Derivatives, they supercharge an underlying asset, add features to it, make things possible that you wouldn't have otherwise. They structure something new. And I'd say you hit the nail on the head, which is the main structure here is that the floor price will always perform the same or better than the underlying. That's it.
Yeah.
The NAV token, so named because of this concept of what a net asset value is, and just how much you have on the books. This is a NAV that rises. The NAV being the floor. Why don't you click it into USD mode to point it out?
Yeah, I just want to clarify. So the up only floor feature is true for OR and NAV OR are the pair. And when you convert this into a USD chart, of course, the underlying, in this case being OR, can go up and down versus USD. And so the visual you'll see in the floor is a reflection of that. The floor in this case can go down in USD terms in line 1-to-1 with the OR token itself. Whereas versus OR, it can only go sideways and up. Just to clarify that piece.
Yeah, it's all about what you quote something in. You know, if OR were quoted in euros or yen or pesos, you'd have a different price chart. You know, the US dollar is a moving target also, and everything quoted in terms of that moves with it. So when you quote the NAV token, the floor, in terms of the true underlying, it only goes up. But it's also the case that if you quote OR, because it only goes up with respect to OR, then that also means or with respect to dollars, and the floor with respect to dollars has the same relationship.
Mhm.
You know, that if ore is going up in dollars, so is the floor. If ore is going down in dollars, so is the floor. After all, it is a derivative. But in terms of dollars, the floor outperforms ore. And that's really the crux here, is that a NAV tokens will outperform the underlying.
That's it. So
Necessarily.
yeah, you grab the amplification, and again, referring back to my post for anyone who wants to read a little more in detail from yesterday. But when you have this positive skew amplification, and I'm going to pick a nice comparison here. Hilo is a DeFi primitive or app on Solana, and they've got this thing called X Sol, and I bought some. I'm a fan, and it's 2.5, I think 2.75x leveraged Solana, and it's amplifying your Solana holdings. If you buy that, you are amplified by 2.7x up and 2.7x down. So there's a neutral skew. There's no real difference. Up and down, you're just getting amplification. In the case of Samsara, these assets, these NAV tokens, they have a positive skew to that amplification. And so the outperformance can exceed many X, and the underperformance in periods where this market price of NAV or perhaps is dropping. You bought it here, now it's there. In this period of time versus USD, you underperformed ore. But as you can see here, over time, the floor ticks higher and to the right. And there's a new feature in this that I really want to highlight that you inserted in the last 2 weeks. It's been much anticipated, and that is fees to floor. And so there's buys and sells and borrows, and all of those accrue a small fee or cost a small fee. And a portion of that fee goes directly into this red line, this NAV, this floor price. It's this reserve of ore on chain, permanently held, backing all the NAV tokens. So part of those fees take in ore, and part of them, that ore goes straight into the floor. And so you can see that here. If you zoom in, you can actually see that the market price didn't move during this period. There was no new net demand, but there was trading. There was buying and selling and borrowing, and those fees had been stored within the protocol and were slowly trickling in. So in periods of upward movement and large outsized demand, the floor tracks aggressively higher with price. And in periods of consolidation, or even sometimes during dips, there's still fees, and those fees go directly into this. And so in all scenarios, whether it's flat, boring, sideways, or up, the NAV ticks higher.
And you can see in the left column how much exactly has gone into the floor to the tune of about $12,000 over the last 30 days being portioned out from fees.
Yeah, right here.
Yeah, right there.
Yep.
This model it follows the basic dance steps of what DAT companies were out to do, which is we want to amass a stockpile of a digital asset. And in order to do that, we give people something to trade, the share of the DATCO. You buy our share, we'll take that money, we'll buy more Bitcoin or more Sol or more whatever. You need both sides of that. There has to be something with kinetic energy that can be traded and speculated on, purchased, invested in, so that this vehicle can expand its treasury. This is just a simplification of that model, that if people buy the NAV token share, NAV OR, that pushes the price up. And as the price goes up, that's more money into the floor. And then on top of this is a sweetener, because this protocol is itself the market, the revenue generated from trading, borrowing, anything that produces a fee. The thought is, why not also invest that into the floor? It's making fee revenue, stick it in the floor. This would be like if MicroStrategy got some kind of residual every time a share of Master was traded. They would take a few basis points off of that and buy some Bitcoin with it. Unfortunately, they can't, because that's not how conventional exchanges work.
The NASDAQ's not doing that. Yeah.
Yeah, they don't give you kickbacks.
No.
But you can do things in DeFi the right way, from first principles. So yes,
Yeah.
there are two things going into raising the floor. One just being the simple appreciation, people buy the share. And the other is all of the fees are continuously trickling in to fill up the floor.
Yep. And because the credit in the system is all based on the value of the NAV, or the floor in this case, as this floor ticks higher, I can borrow more ore. In this case, I'm trading NAV ore. So let's go back all the way to the beginning of this ore market. Now, this is DevNet. So the first few days, obviously, there was nothing going on as it was getting set up for this campaign. But let's say I jumped in there with 100 ore tokens. The very first NAV ore that I minted is costing me $1. The second one, maybe $1.01, $1.02. And as this supply of NAV ore increases, as I'm minting new ones with my ore, the price ticks higher, the supply ticks higher. There was no supply prior to this. 100% of the NAV ore tokens were minted in this way, and thus they are all backed directly by ore. Now, as it grows and as it continues and we see demand flowing in, this floor ticks higher. And that means the bottom end of my NAV ore, the backing of that NAV ore is increasing. So I've put in 100 ore to start off this asset, and I've got my, let's say, whatever that would be, a couple thousand NAV ore tokens. And right away, I can borrow something against them, whatever that floor value is, according to this. But as this increases, I can continually borrow more ore. Now, this is a non-liquidatable, interest-free loan. And I can take that ore off site if I want, and I can go and stake it on the ore protocol and take my 20, whatever it is right now, 22% yield. I've also got some ore staked, fantastic token. And in that way, when I start my journey with Bonk or ore or whatever token I want to trade, Bitcoin, when I come to Samsara and buy these NAV tokens, and this is an important piece here, it's not the end of a journey. It's not like, oh, I've got some US dollars and I want to go buy this token and then I stop. It's the beginning of that journey, because I can then take that interest-free non-liquidatable loan in token and I can go wherever else I was going to take it anyways, whether it was to stake it on the native or staking portal, or to take Bonk and lock it into Bonk rewards, or maybe to take the Bitcoin and lend it out on Camino, whatever I want. If I start that journey here, I get this NAV token outperformance versus the base asset, and I still get access to liquid base token, in this case ore, to go do whatever I want. So the looping strategies, the DeFi stuff you can do, everything gets really interesting when you start your journey at Nirvana with a NAV token, especially when you switch it to USD terms. Then you realize that this red line, this base minimum redeemable value of my NAV tokens, is always going to outperform the US dollar or pair. It is that this gray line will never cross above. This is a really bold statement. It's a really fantastic set of benefits, and it's a really beautiful new derivative. And all of it depends on the floor not breaking, the floor working, the math being sound. And so the idea with this campaign, as we get ready to nuke these things into the floor, is that we want to manufacture the most obscene sell-off you could ever imagine, right? Even in the most insane situations, whether it was the COVID crash where BitMEX almost sent Bitcoin down to zero, they had to pull the circuit breaker, whether it was the FTX crash where Sam Bankman-Fried rugged the entire world, like whatever those cases are, you just get these massive events, tariff scares in April this year, even a few weeks ago on the ominous 10-10, big Binance stopped processing orders and market makers couldn't move their bids and the whole world got liquidated. All of these events create panic in the market. And it's in those moments that a system like ours needs to survive. It needs to stand up. It doesn't matter if it can handle a few dollars at the floor. It doesn't matter if nobody's going to sell at the floor, because it doesn't really make sense to do that. You can just borrow the full amount out at that point. This thing needs to be able to withstand a 100% sell-off, where every single NAV token in supply could be sold back into this floor, and the very last one would fetch the same price as the first one that was sold at the floor. And that's how it works. That's the math. And like anything with math, it works every single time. If you take 4 plus 4 and you put it in your calculator, you're going to get the number 8. And questioning whether this works or not, when you really understand how it works, is like saying, well, I think if I type 4 plus 4 enough times, I'll get a different number. Like, good luck with that. But I also understand that it's not easy and intuitive to understand exactly how this works. So maybe you could take us through the math I know it's probably too big a question to unpack on here. But when I first met you, you were almost bored by it, like, it's just math, it works. And so we've put this campaign together to give everybody a chance to really see it in real time, in the most absurd sell-off black swan type scenario you could imagine. And if it survives that, stands to reason it could survive just about anything the market throws at it.
Yeah, to put it simply, and first, I must give you credit that it was from those long conversations that this idea emerged. Where, and at a certain point, it's more efficient to just build a demo where if you don't believe it, just come and break it, rather than pull out the whiteboard and slide ruler and show the code, for the umpteenth time. Math aside, the idea is just this, that if you sell, you're selling to somebody. The price that you sell at is matched by the bid. Full stop. A price will settle wherever the bid is. And if there's a bid at a price at sufficient size for every single outstanding share, well, that's where the price will stop, because there's a bidder at that price level for literally all the tokens in supply. That's all that's going on here. The protocol itself is providing that bid. It provides the bid at size for every token in supply. It's just counting them and holding on to enough liquidity in the market to make a flat region in the price line, so to speak. It's all about liquidity at the end of the day. This, if you were around in 2021, this idea of protocol-owned liquidity had some fits and starts, where the thought was, hold on a second, we're minting these tokens, we're creating digital assets, but then when it comes time to make a market for them, you step outside of the reins of crypto. You're dealing with legacy rails for markets. And the thought was, why not make markets just as simple as the minting of assets, of tokens is? A protocol can manage the liquidity, not a prop trading firm. I'm not sure that anybody completed that project back in those years, but it put the bug in my head. And the thought was just, why not go all the way? You talk about protocols owning some of the liquidity. How about they just own all of it? And
yeah, the entire market, just live in that bonding
just
curve.
Own 100%. And that is what makes a bid at the floor possible. Liquidity just is the sum of all of the bids out there. And that's just how much money is in the order book, so to speak. So the protocol itself is providing a buy wall at the floor price. The math is rather simple. Count the number of tokens in supply, count the number of cash that you have in liquidity, divide them. That's the floor price.
Yeah, just that easy. I think this all becomes a lot easier to understand when you consider the context that none of the tokens, in this case NAV tokens, existed prior to mint. So there was no pre-allocated pre-sale, team allocation, anything. There's nothing out there that exists outside of this bonding curve, this mint burn, this mint redeem model. And so when you have NAVOR, which you can see here, the supply was zero and there was nothing backing it. There was none to back. And then somebody came along with 100 OR and they bought some. Now there's 100 OR sitting in that smart contract, in that protocol. And there's X number of NAVOR tokens, maybe a few thousand in this case. And so it has full view of the entire supply, and it can make mathematical division equations based on that. So yeah, at the end of the day, there's a few key context pieces that are important. A lot of people, they ask me, they say, well, how do you have a piece of math and code that guarantees a floor? That's crazy. Like, there could be some tokens on this exchange over here. It's like, well, there just isn't, right? In this case, it is important and critical to understand that the entire supply was minted through this protocol. If for example, somebody was to mint 100,000 of these things and take them over to Radium and make a pool, that pool can trade wherever it wants, right? But anyone smart would take the arbitrage of anything that's below this EVM's floor price, bring it back here and just arb it. So the math is pure and true on this platform. Anything can happen outside of that, but we're here to test this baby.
Perhaps you hit on the point of why we haven't seen this before, and it's that people just can't resist reaching into the cookie jar. This only works if you are simple and true to your principles. Don't mint freebies and give them to an offshore foundation. If you can resist that urge of creating tokens out of thin air, then you have liftoff with this.
Yeah, that's it. And there's not too many teams out there. You know, I've had this conversation a number of times just in the last few weeks, joining super teams, spending some time in their office. And there's a lot of marketing firms I've spoken to and growth guys. And, you know, and the name of the game is have a pre-mined supply of tokens, raise with your pitch deck, go out there, you know, you apply an arbitrary value to that product, that piece of token you're selling, and then you go out there and you play the game. You say, oh, we're going to have points and we're going to invite users in to earn points. They don't really know what they're getting, but you know, sometimes these points end up being worth a lot of token that's worth a lot of money. And you drive your metrics and you see thousands of users flowing in. Most of the time, airdrop farmers, it's actually gotten pretty out of control in the last couple of years, where people are just tweeting like, this is the airdrop protocols that I'm farming, you know, like here's the 50 points that I'm farming across these protocols. And what happens, unfortunately, is those points are earned, that airdrop is dropped. In some cases, there's some anomalies where these things just explode and they do really well. There's a strong bid, but in vast majority of cases, they TGE, they drip down, then the tokens vest, the investors get their tokens, and you look back and, you know, people call it, they say, oh, it's the high FDV, low float scam. And that's also essentially what it is. It's this bait and switch where you put out something that has a perceived value, but there's this massive hidden supply that was not paid for, that there was no real demand for prior. And then the game becomes like, can we pump up these traction metrics to drive enough attention and enough usage that we can survive the inevitable repricing of these tokens that happens once they're live? And everything Nirvana and EVM comes from the opposite direction. It says, let's start with zero. There's nothing in supply. There shouldn't be, because there's been no value delivered to it. And then when value comes along and somebody has their dollars, or they have their bonk tokens, or in this case, their OR tokens, and they say, we think that this token has value, and they mint one. Now there's one token, and it's backed by exactly how much value that person believes it has. And so you get this greater source of truth. And this is a big part of why I joined your team. I'm really tired of the games and the silliness and the status quo. And you know what? It makes your life easier. It does make your life easier when you have 10% of a pre-mined supply to give out to whoever will work with you and talk about you and promote you. And if you have, you know, 20 million tokens that you can just give out to people to come and use your stuff in airdrop farm, but then they leave. And oftentimes what we see is the lights turn off about a year and a half later when the runway runs out. And 90 so plus % of startups fail. That's not new. But these token games is something that we are reimagining. What if every token in circulation had real value that backed it, and that value and liquidity became properties of these tokens from day one and forever? And that's it. That's the dream. That's what you've built. And we're excited to try to break it today, because none of this matters if the floor doesn't hold. It's important that we demonstrate that.
Well, what do you say?
What do you say? Yeah. I mean, did I capture that? I mean, that's...
Oh, you did, yeah.
In my mind.
If you want something to store value, what better way to do it than make sure that every unit was paid for by somebody? It'll have value if everyone who holds it bought it. It's very paradoxical to want something to store value that has zero cost basis.
Yeah, and it kind of goes back to proof of work. Now that you put it that way, it makes me think of proof of work, right?
Right.
Every Bitcoin in circulation was mined by somebody who had hardware, who ran that hardware, who absorbed energy. It's backed by energy, and the amount that was, energy that was needed to mint it or to generate it. What do we call it with Bitcoin? Mint. But the amount of energy that goes into every Bitcoin has gone way up over time as the hashing algorithm goes up, the difficulty adjustments, blah, blah, blah. And so when you talk about first principles, this really reminds me of that. And we haven't seen any innovation in that space really until on-chain, like with on-chain stuff, I think the closest thing I could say would be ore, which is why it's on my screen. They've come up with this roulette-esque table of 25 squares, and you pick one, you put your soul on it, and the winning square gets some ore freshly minted. There's some value that went into that, and I really like what they're cooking. We've talked about it a lot, and it's one of the reasons it's on our website, because their whole thing is store of value, and we have created a store of value platform that can integrate it and really just stack that store of value promise on top, and give everybody a fresh derivative that, again, does not preclude somebody from going to stake their ore back on the ore website. They can simply borrow against their NAV ore and take it back home and really just capture both, which is a fantastic looping strategy, or second level DeFi strategy that I'll be writing about in the future, I'm sure.
Yeah, the comparison to Bitcoin is apt. That every Bitcoin in supply was paid for with energy. Nirvana is just the application of Bitcoin's principles to markets. So swap energy for dollars. That every on-end supply was paid for with dollars. And why dollars rather than energy? Because Nirvana is interested in liquidity. So Bitcoin amasses a big hash rate that supports the security, the energy of the network, because they're interested in decentralization and censorship resistance. Nirvana is interested in value. So it uses dollars to produce the tokens that then amass, rather than massive hash rate, massive floor price, massive reserve. And then, same thing goes on here. And you amass a massive reserve of ore or SOL or Bitcoin or tokenized stocks when they start taking off. Oh, we're
somebody is selling. Okay, so
someone's antsy.
Yeah, so let's get into it, guys. It's time to crash the floor, or break the floor, rather. The idea here is that in ZBTC terms, so flipping over from the USD chart, now we've got the ZBTC chart. This protocol backs 100% of the supply of this token at this level, at this price. So redeemable value now, if you can see on my screen, is 128.09 sats. Is that what that little symbol means?
Micro Bitcoin, which is 100 sats.
100 sats. Okay, micro Bitcoin. I was looking at that, like, what is that unit?
I know. I've been trying to figure out the best way to show, $5 worth of Bitcoin. It's quite a puzzle. Not many assets are worth $100,000. It's hard for UIs to show that. Anyway, 100 sats. That's a micro Bitcoin.
That's it. And so the the market price will fluctuate as with any token. Buy, send it up, sell it down. But this infinite bid that we described, this protocol bid, it is the red line. You cannot sell below it. We challenge you to try, and I'm going to try. We're going to nuke it. I've been minting tokens through this Get DevNet tokens for a couple days now. I know you've been doing the same, Sid, and a number of people in the community. We've got hundreds of people signing up on this demo to use it. Congratulations. If you connected your wallet to this demo and participated in this, you are now whitelisted for the first market that's going to go live on Samsara. There will be a 24-hour window exclusively for whitelisted wallets. Now, shall we sell stuff?
Let's sell stuff.
The idea is anybody, and this, I should clarify, you're not going to sell below the floor, but just for legal purposes, the first wallet detected to sell below the floor would be the one receiving $50,000. I'm going to start selling, and anyone watching now, I'm going to tag the Discord just in case somebody's participating but not watching. That'd be super weird.
You're on IMSL. I'll contribute to the nuking of ZBTC.
Yeah, and the funny thing is, because everyone presumably is like thinking, well, I'm going to try to sell. I'm going to do a max sell here. Getting a transaction failed. Uh-oh.
Oh, you're going to be running into slippage issues while this is going on. If the price is slipping 30% in a minute.
Let me try. Maybe it's a decimal error. I didn't get any of those during the last days. Let's do it. So, yeah. Oh. Yeah. Okay,
I've actually got a ticket in so that if it is actually a slippage failure, the Apple.
Oh no, you know what it is. I'm so silly here on the live stream, connected to the wrong wallet. My bad.
Oh,
it's not the app. Oh my God, I just felt your heart rate explode. I apologize for that. I'm on the wrong wallet. Okay, here we go. Yeah. Okay, transaction confirmed. All right, we're off. So I've sold all of my MSOL. Or excuse me, my NAV MSOL. So now I have a bunch of MSOL, but I also had a loan out. So I'm going to now repay that. So I was looped. I was looped up on this thing because that's a great way to extend the DevNet tokens that I wanted to just have a lot of. So I've repaid. Now I go back to sell some more. You're going to see this chart touch the floor very soon. Yeah, so we're just going to spend the next 20 minutes or more selling every last thing we own. And the first token sold at the floor is going to fetch the same price as the last token sold at the floor. I remember we tried this with the Nirvana app, and I was really I really wanted the 100% of the supply. I was like, it would be so cool for this like supply to be zero.
Mm-hmm.
You could be like, but there was people buying it. Like during the crash,
Always
there was this like,
trolls.
yeah, the guys were trolling us. They were trying to lift it off the floor. I was like, guys, just sell everything. And then, a few people were sleeping, but here we go. Moruk. All right.
As I'm watching this, I just can't wait for got some new modules in the work to speed up the throughput for the updates. It takes about 20 seconds for a Solana transaction to finalize. You can get around that and move things faster, have optimistic updates. There's going to be some improvements, so this is a bit more snappy, real time.
Yeah, and it was snappy in real time even 2 weeks ago, and I think this weekend in a midnight fervor, you kind of ran a few changes, and there's been some really nice updates to it, and I noticed some of that latency return, so re-optimizing for that.
It's going to become real time pretty soon, where you'll see updates when they happen.
Yeah.
Okay. Well, ZBTC has settled down.
I think I hit the floor with that one for sure.
Yeah. So I'm going to draw our attention to a top line number, coverage. Or assured. Yeah, there we go. ZBTC is 100% covered. Yeah. What does that mean? I suppose the technical term is principal protection in kind, which is saying that if you were to buy a NAV ZBTC right now, 100% of your principal is protected. It's covered, which is to say you're buying it at the floor price, which is to say you're buying it at the lowest price that it would ever be. That's what this metric is saying. So when you purchase one of these, you know precisely how much of your principal will be covered by the protocol. Another way of thinking of this, flip it upside down. This is your maximum loss. So if you buy something that's 100% covered, your maximum loss is 0. If you buy something that's 50% covered, your maximum loss is 50.
Yeah, and feel free to dig into these because I think this is probably the best place to watch the action from. And I'm just selling here on the other side. I got a window up here and I'll just keep nuking away while we talk about this. Because one of the big changes that came this week, for those of you who've been following the DevNet app, new metrics here that just really capture the essence of what it means to have a NAV token. The key metrics, right? Trading, price, those are really interesting on most exchanges, every other exchange. But there's something really special happening with these NAV tokens that sets them apart, that makes them unique. And you've done a fantastic job this weekend of reimagining how to really highlight that. One of those being the multiple. There's been lots of good discussions in the Discord this week about what does this mean? ARP with regards to Prana, things like that. So we just covered the assured piece, which I think is really nice. Buying at the floor means you can literally sell it back for that exact same price, guaranteed by the protocol. Maybe you could get into multiple. I don't think people will be able to read this from where they're sitting on my screen. So maybe just, what does the multiple mean?
Oh, the multiple. That is the lifetime performance of the NAV token. The lifetime performance is, it starts at 1. Where does it multiply from there? If it goes up to 2, it has 2x, 3 is 3x, 4 is 4x. This is a way to measure the the growth of the NAV token in terms of itself. There's three ways to measure it. You can measure it in terms of how much ZBTC is it worth, 0.0001 to 0.0002. Another way to measure it is in terms of dollars. It started at $1, now it's $1.50. Maybe Bitcoin goes way down and now it's worth 50 cents. So you can track the performance in terms of dollars, but that doesn't quite tell the story. And thinking in terms of 0.00001 ZBTC is hard to understand. Who can track all those decimal places? And so this is a simpler way to just say, if the number's 19, it's gone up 19x. It's a way to price it, in an easy to comprehend way.
Like a simple single number to represent all of the gritty details.
Yeah.
I was thinking through this yesterday because the ore market is obviously the X is dropping now as we try our best to destroy value in the system. But I was thinking about it in terms of because in that period of time, I think it was November 24th, 12 p.m., I saw the market open. And so that NAV ore token obviously went up versus ore as it was minted and bought. But the ore itself had actually dropped 38% in that period of time. It was a handful of days. And so the multiple, right, the dollar cost of ore was about $7. So if you bought the first one for an equivalent of $1, you're up 700%. However, the ore price dropping 38% in that same time set this multiple higher than 7x. I think it was something like 24 or 16 or whatever. And so it's the relative outperformance, right?
Mm-hmm.
To the ore token, which we're picking on today because it's the top line here on the chart, and it's the one that I'm currently trying to sell as much as I can. I think I've only got 3 more NAV ore to sell. There they go. My full loan repayment. Okay, I've officially gotten through all my ore. Let's go take a look at that chart. Did I hit the floor yet? Not quite. I'm going to need some more dollars here. And there's a buyer in there. Who's buying?
Who's buying? You know what, RT? I gotta have my hat in my hand right now with one thing. Can you go to let's just say the ZBTC market?
Yes.
When we were preparing for this morning, we were trying to avoid any doubt, and for a while, the price in the trade table was just showing dollars. And then the thought was, well, dollars, they move around or whatever. The floor is quoted. Let's say you quote the floor in dollars. Let's quote it in terms of tokens. Here's the thing. The price that's showing in the trade page is the fill price for the trader, which includes the fees. In an attempt to be honest, it's saying after you take away 20 bips of a fee or something like that, what are the actual tokens that have moved? And I'm seeing now that when you look at the fill price there, that's not the market with the floor.
Yeah.
So
we did that with our last campaign, didn't we?
I know.
The floor was like $27.48, and all the sales at the floor were coming in at like $29.38 because they were factoring in the fee.
Yeah. The irony here is that 2 hours ago, it was just showing the dollar value. And I was thinking, you know what? I should show the actual value that the trader received. What was their net cash? And I made the problem worse. But that is exclusive of the fee, that price.
The floor after fee.
I ended up taking just how many tokens did the trader get? How much CBDC did they get? How much NAV did they spend? And it didn't include the fee, because that is from their perspective what it is. Well, whoops! It's still. Did
the system break? Is there any liquidations? I mean, the core piece here is that, of course, you're not borrowing up to floor minus fee. You're borrowing up to floor, right? This non-liquidatable interest-free loan is priced against the floor through which the protocol cannot be sold.
Yeah.
Almost out of tokens, and then we're going to go look around on some of these charts and pick up the dead bodies here.
Let's see. No one's selling bonk. Hold on, let me.
I just started. That's the last one I had. I don't have a metric ton of it, but I'm selling it all. Nav bonk is going down.
I got a little bit that I was holding on to. No love for bonk.
Yeah, it was sitting down at the bottom of the leaderboard all week. I don't know.
Yeah.
Or at the top. Bitcoin just below. I've got a few thousand nav bonk left. Need to hit the books with, and then we'll go explore.
Hey. It would be great to see the supply go down.
Yeah. Let's go last sell here.
I want to see the supply go to 0 on one of these. It's kind of tricky to do because you gotta, in case somebody borrowed something, they gotta pay it back so they can withdraw their collateral. Let's see, we got Yep.
No, my Phantom wallet's on the very last sell. It won't pop up. The Phantom's been a little weird this week. I was reading on, because I noticed with my ledger too that you had to kind of unplug it to do anything. Oh, it's because I already sold it. But yeah, the Phantom ledger is having an issue right now, but I'm on a hot wallet, so it shouldn't be a problem. I don't think it is. I'm okay. I'm officially out of tokens. With a 2-day window, admittedly, versus April, where we had 2 weeks, I was sitting around in the evenings, just like clicking away and fauceting tokens. I had a lot more fake on it to sell back then. Anyways, I've sold it all. Let's go look through the charts here. Back to the homepage, we should see nasty red. So imagine this. You're sitting down. You've got a massive loan out on your NAV token position, and China bans Bitcoin, which actually was a headline last week. It was like, China will look to restrict crypto trading in China. Like the China ban Bitcoin also joined the fray last week, along with MicroStrategy and Tether FUD, all in the same day. It was very sus. Point is, you wake up to those headlines. Most lending protocols, any leverage places that you're at where you don't have a stop loss or anything in place, you should always have a stop loss, but just say you didn't. Or just say you did, and you're hoping that the system didn't freeze at the moment of stop. It's a sweaty experience. It's not a good feeling to be in a position, especially if it's a longer term loan. You're looking to, grab some capital efficiency. Maybe you're looking for a borrow to exit strategy tax wise. Now, whatever the case is, if you've got outstanding leverage or debt in the system, days like this can be extraordinarily scary. NAV tokens, not so much. They reach this level, and the protocol supports, you can see every single cell here fetching the exact same price. And that's true as the supply collapses to 0. Every single one. And the first buyer stepping in here is going to lift it off that floor. And so, again, going back to the purpose of today is we just want to send everything to as close to 0 as possible. And in this case, the idea is they just don't go to 0. Now, in USD terms, this red line is going to track the price of Bitcoin 1-to-1 in times of, if it's not moving. It's just going to float with Bitcoin. So when there's demand and volume and trading fees, it's going to rise versus Bitcoin. And in any other circumstance, it's just going to track it 1-to-1. Bitcoin's not very volatile today. So let's go pick on OR. OR has come off a little today versus USD. You can see here at the top, it was 115 this morning. It's 91 right now. And so the US dollar value of this floor is actually dipping with it. But as the purple market price crashes into it, it's just there, ready to redeem 100%. So anyone who borrowed all the way up to the edge of this, there's just this infinite bid, 1 BIP away, right? You can walk the line to the edge of liquidation, but can never be liquidated. That is the beauty of the system. And when you have a borrow lend that is based on an impenetrable PIP level, like this floor, that's the major unlock that I think people will start to get more comfortable with once we continue things like this demo. It's easy to say non-liquidatable loans and leverage. I've read a lot of white papers that talk about such benefits. There's many ways to skin this cat. None that I've seen demonstrated in public, which I would want to see before I would lever up to that edge. But one that I was reading about last week, they're like, we also have a circuit breaker just in case. I was like, why would you need a circuit breaker? The math needs to work in all conditions. If the system has any scenario where it can get stressed, then the market will say, hold my beer. And one day or another, it'll come and find it and stress it out. We've seen that time and again. In this case, calculus has our back. So Nirvana, or the ore market, is at floor. We need some JLP sellers. Can I get a JLP seller on aisle 5? We didn't even get to the floor on JLP. What the heck, guys? We need more JLP sellers. Which is funny. It's kind of ironic. It's like, even when you want to send this thing to the floor, it's hard to get it there. The interesting thing that there's this ever-going debate in the Nirvana Discord community, and really on our team as well, is like, will anyone ever sell on a token at the floor? That is a philosophical question. No one ever has. We demoed it in April. You could. We sold about 12.5 million into it in about 14 minutes during that break the floor campaign. And so it's there, it works. But there's an interesting game theory that emerges when you're at floor, especially in an asset like Nirvana that's backed, or on a token that's backed by USDC. At the floor, if I have 1,000 ANA tokens and the price is at the floor, I can borrow 1,000 ANA token, or excuse me, $1,000 or 1,000 ANA tokens worth of USDC, or I can sell them. And when you have that scenario set up where you're like, okay, here's the place, I need my dollars, I want to get out of this thing, you have two choices. You can borrow the dollars and maintain your exposure to the ANA, which at that point is only up from the floor, or you can sell them into the floor. And so the theory is that no one will ever do that. It would be extremely irrational. In the case of Samsara, because the underlying tokens are volatile, there will be cases, I think, where people will sell at the floor. For example, let's say Bonk just went up 10x, and you think there's a bear market coming. And so, yeah, there's a floor in Bonk. Let's go look at it. And so, yeah, right here, we're actually at the floor right now. So there you go. So trading at this floor here. Now, if I think that Bonk itself is going to drop by 80% over the next 6 months or whatever, well, my NAV Bonk is going to track that value 1-to-1. And so in that case, with these volatile Samsara markets, I think we will see some selling at floors where people just want out of that underlying volatile asset. But we have yet to see anyone ever sell Nirvana at the floor. Now you can see there's a war going on. Somebody's lifting this price. Somebody is desperately trying to unleash. Somebody just bought 114K worth of NAV Bonk. Guys didn't get the memo. Anyways, I mean, there might also just be people trying creative ways to get this thing below floor. Like, can't sell if I don't buy first. So who knows? Everyone in the Discord that I see is reporting that they have sold. What's it looking like on your end? You're looking at the back end? How are we holding up, boss?
I'm trying to fix this price report right now.
Oh, he's like, we're just going to do this live.
Adding the fees back into the fill price, so it is accurate. Yeah,
more accurate than honest, I guess. I mean, I personally enjoy when the fee is taken out. So like, I withdraw $1,000 from Kraken because somebody wants me to send them $1,000, and then $998 arrives, and I'm like, what the hell? They say, dude, you're $2 short. And I'm like, okay, Kraken. So to Kraken's credit, they do take the fee out. So if you try to send $1,000, they'll just withdraw like $1,001, and 1,000 is what will arrive. And we're dealing with a similar kind of situation here where, the debate is, should you show the price that was sold at, or should you show the price that the seller receives after fees?
Yeah.
Both at the AVM level, at the protocol level, are the same. The floor amount was received for those tokens. What is a friendlier UX? Call in.
Well, for right now, I'm pushing a change as we speak to add the fees back in.
Yeah.
There's a lesson with all of this. It's not only that the floor is there, but it's also the floor is what I'm looking at the homepage right now. All the tokens dropped about 40 to 50% in value. That's no coincidence. The way Samsara's AVM works is that the maximum drawdown from all-time high is around 50%. It's actually oftentimes less than that because of how fees go into raising the floor, but it's within that ballpark. And what this means is that it's not a regime where a token can go down 60, 70, 80, 90. Sometimes I'll see large market cap assets lose 20% one week and 20% the next week and 20% the next week. And I'm thinking to myself, we don't have to live in this world where 50% down is enough. You don't actually need to allow tokens assets to drop 70% from their all-time high anymore. And these are very illiquid ones too. Extremely illiquid, these demo tokens that we have. And yet that's all they can fall. And point number 2 is that even though they fell 50% from their all-time high, which is as much as they'll ever fall, the floor has risen such that they're still outperforming the underlying. So even in the worst case, ZBTC has outperformed Bitcoin by a lot. What is the floor of ZBTC? What's the multiple? The floor multiple is at 10. NAV ZBTC has outperformed Bitcoin 10x in the last
since it was launched. Yeah,
even with the panic sale of NAV ZBTC, it's still outperforming Bitcoin by 10x. It was outperforming by 21x. Now it's only 10x.
Only 10.
Yeah.
What's really interesting here that I just noticed on the bonk chart, somebody stepped in and bought it, I assume because they're out of tokens and they just want to have more to sell. Who knows? Now, because this is a line chart, you guys be aware that line charts only record the close of the price. And so if this was a candle, as you saw a moment ago, it was trading at the floor. If this was a candle chart, you would see that wick. And it seems that the line chart is tracking a time frame where that candle has closed back up here. So you don't see it having touched it. But what I want to point out is that the floor actually went up here. Because in all of that panic selling that we just facilitated or coordinated, there was a lot of fees generated, right? Every time someone sells, there's a fee. They buy, there's a fee. There's borrow, repay, right? I don't think repay has a fee. But all those fees generated. Oh, there we go. We're back down at the floor. But the floor ticked higher. And so the minimum redeemable value of every outstanding NavBonk token, the credit capacity of every NavBonk token, just actually went up while this was happening. And that's a really interesting way to run a market where the broader benefit for all the holders of this token increases, the bottom line increases, even at times where you try to coordinate the most severe sell-off you could. Now, if we had 2 weeks and we fattened up the Vossited 10x, had $5 billion of value here, this would all still operate the same way. Because like I said earlier, it's based on math, and math scales. 4 plus 4 is 8, 400 plus 400 is 800, et cetera, et cetera. And you can add as many zeros as you want, and the concept works. We wanted to keep it short and sweet this week because it's breakpoint next week. We're going to be there. And having this run for a couple of weeks didn't seem to make sense at the time. But this is a campaign we're going to run quarterly, I imagine. It's just a fun demo. Of course, there's going to be skeptics. There's going to be people as this thing grows and develops and tens and then hundreds of NAV tokens are trading, and there's some TVL growth. across the ecosystem, AVM launch pads, and there's just always going to be people shouting it down saying, oh, that thing's not going to work. Wait till the D-Day comes and this thing's going to blow up. And we'll just calmly, politely, and excitedly invite everyone to come in every quarter or so, and we'll run it up. We'll have fatter faucets, larger prizes, various incentives to participate, and say, come and break it, because it only works if it works. And you can only prove that it works if you try to stress it. And I talked to you about this back in April before I joined the team. I said, this is all sounding really good. You've tried to break it on DevNet 1,000 times. You can't. It works. You're convinced. I want to feel convinced. I want the world to feel convinced. And I don't really want to sit around and wait for FTX to blow up or for this next major black swan and then find out, that could take 2 years. And like we said earlier, there may not be a scenario where someone will sell on a token at the floor because you can just borrow max at that point. So we facilitated that by spinning up a clone, in this case, the DevNet clone. We could do it on mainnet as well. So for anybody who joined today or this week, or this $50,000 price caught your eye and you thought, you know what, I think I can break this thing. Like, surely somebody can sell below the floor. If you're new, thanks for coming. It's not a goodbye, but I just want to say I appreciate everyone who dropped by. We can see here, looks to be that most tokens that were held have been sold. This assured number, as you mentioned, at 100%, it is at the floor. So if I took 0.1 Bitcoin and I bought NAV ZBTC, at any time in the future, I could sell it back for 0.1 BTC. The assured value of that Bitcoin would be 100%. And as these things grow and lift and the market price escapes from the floor and trades above it, that assured percentage goes down temporarily, and at about 58% above floor, that's when these floors start to rise in earnest, which you can see right here. And yeah, I can't get over this feed to floor feature. This is one that's been talked about in the community for a long time. Months we've been talking about it, saying, oh, this is something we really want to see. Sid, you've been cooking absolutely furiously in the kitchen on the Samsara front, building an exchange from scratch. And the latest feature added was fee to floor. And today is the first time we really got to take a look at it in real time to see that even on bad days, this floor price, this tiny little red line here, you can see actually went up while everything fell from the sky. Very cool.
It's very cool.
Yeah, and let's see if I can find like a red only price quote chart. Yeah, see, the buyers are stepping in, people getting bored. I don't see anyone in the Discord claiming to have sold below the floor. Nobody ringing the bells. I mean, you're right. I say quarterly. Like, I love this campaign, but I think you've said before too, you're like, at some point it just gets boring though. Like the guys in our community yesterday, they were saying like, guys, we know nobody's going to sell below the floor. Like, we're not going to win the 50K. I was like, guys, you got to participate. All right. There's a lot of people I actually had a call just before this where now you're talking about the protocol, the benefits, how it works, the outperformance guaranteed by the NAV and the rising floor versus base assets, like all these cool things. But there's always just this elephant in the room where they say, what if it doesn't work? What if the floor could break? What if these claims are just hopeful and not based in reality? So campaigns like this become incredibly important to kind of grow and build that lendiness, that trust. And as you can see here, it works. It's fun to see. And we actually hadn't demoed it yet for Samsara. So there you go. Volume flowing in on sell day. So this is all sell volume, mostly. It's pretty crazy. I know. Trying to manufacture the worst day in Samsara history. What you end up with is a drawdown, significant drawdown, zero liquidations. Nobody that was leveraged or borrowing against these assets can be liquidated or was liquidated. And then what you see here is like maximum opportunity. So anybody who is waiting around, maybe they said, oh, these NAV tokens look cool, but I'm not sure. Well, now they can look at it and say, okay, these numbers are really high. I think there's an opportunity here. And that's something that you and David both like to talk about. I like to talk about it too, but the asymmetric bet, the asymmetric trade that reemerges every time the market price interacts with the floor price. For example, back here on December 2nd, the multiple for ZBTC was 3.68. So from the first one ever minted until that moment, it has outperformed Bitcoin by 3.68x. Now, up here, that multiple is 10.38x. So you might say, oh, the person buying here actually took less risk than the person buying here. But here's where they're wrong. Up here, you can see there's 100% coverage because you're buying at the floor. There's an infinite bid at price. So you can pick it up. And if at any point in the future, even the next moment, you decide you change your mind, you can sell it back. Minus fees, you're going to be made whole. Down here, yeah, the multiple's lower. They got it in early. The price is higher since then, sure. But there's only 62% coverage for those of you who can't see. I'm pointing at my screen like that'll help. But there's only 62% coverage. In other words, the person who bought at this price actually took more risk than the person who bought all the way up here at this price. And that's an interesting, weird, strange, new dynamic. And the point I'm getting at here is it's never too late to this market, because as price consolidates, chills, relaxes, and ends up trading around the floor, a new trade emerges where, yeah, sure, it's a higher value token now, but its downside has ratcheted up. Its maximum downside has ratcheted up. And so the actual asymmetry to buying NAV ZBTC right now is infinite, right? 0% potential downside and infinite upside. Whereas here, 38% potential downside, right? If you bought it at this price and then decided tomorrow you wanted to get out of everything, the most you could lose is that 38% delta. And that's where these markets get really interesting long-term, mid-term. Because through the bullishness, through the bearishness, through the boredom, the consolidations, all the fees, the demand, the new liquidity just keeps entering into the system, and a portion of it each day gets locked away based on fees and demand. So the market always resets. It always ends up, new asymmetric opportunities emerge throughout the life cycle of these tokens. You can see here, somebody crashed into the floor, 100% coverage at that price. I could go all day, man. This excites me. And if you're in the community and you're sitting there saying, okay, guys, I get it. It's awesome. When Nirvana, when Samsara, when mainnet? I'm going to tell you what I've been telling you for a little while now. Soon. But closer than ever, as you guys can see. It keeps
very
evolving.
close. Yeah.
Keeps evolving. And then you get into these debates about, like, okay, say it's ready and we want to push the green light tomorrow. Well, we're flying to Dubai to be at I'm flying to Dubai to drive to Breakpoint next week. The week and a half after that is Christmas break. When's the right time once you're in the ready zone? And that debate rages on. We're so close, though. There's a lot of moving parts as we zero in on just the right way, time, and place to do it. But I'll end that thought with soon, TM. How's it going over there? You look like you're deving. You working on the side here?
Why am I doing this live? Yeah, I'm repopulating the caches right now. I pushed the change and the caches were updating. And for a second, the trade events were missing from the front end while everything was rehydrating. That point that you made about what's the asymmetry when you're at the floor is very apt. Risk. What is risk? Risk is just uncertainty. It's just a finance way of saying uncertainty, just not knowing. The asymmetry of risk is just an asymmetry of knowledge. At the end of the day, that if you're at the floor price, there is zero uncertainty about how low it can go. And there's maximum uncertainty about how high it can go. And then that's why the risk is infinitely asymmetric there. You're dividing a number by zero. That's not true when the price is above the floor. There's now uncertainty about how far down it can go. You have risk in that direction. It's capped, but it's not capped in the other direction. And the asymmetry is ever present. And risk is not a bad thing. The whole thesis with digital asset treasuries, as with Samsara, is that there needs to be risk. There needs to be speculative energy. There needs to be reward, which goes with risk. And all of that energy is what feeds into the floor. It's an interesting situation where you know that if tomorrow everybody decided, this is great, let's put all of the Bitcoin into Samsara, just 100% of it,
Yeah.
it would work. And what would happen is the people who got in earlier would have the floor shoot way above their entry price, and they'd be permanently in profit with respect to Bitcoin. The people who got in a little bit later probably also be in that same situation. And the people who got in last would be buying above the floor price, but only by about 50%. There's still that kind of modest limited risk with the trading of the NAV token, but it would work.
Yeah,
I could run the numbers of what it would be, but let's just say hypothetically that the floor just goes up 200x from entry if you moved all of the Bitcoin into it, an out-popped NAV Bitcoin. What that also means is that if you hold one of these NAV Bitcoin, you can borrow 200 times as much back out of it. Liquid.
That's what I wanted to touch on. I'm not sure that I did earlier. I've said a lot today, a lot to say. But one of the interesting examples that I shared here with somebody, and they were like, dude, that's crazy. I think worth highlighting. You just kind of touched on it. Is let's just pick on ore here. I put in 100 ore down here. The floor is, let's say it's at 117x, whatever. Well, now the floor is at 6x. So it's gone up, let's just call it 5x from that point. And so that minimum redeemable value has increased 500%. Let's say, for example's sake. So that 100 ore that I placed in here to buy NAV ore, the minimum value of that NAV ore has gone up 500%. And that's what I can borrow against. So I've placed 100 ore into this market. I can now borrow 500 ore out of this market, non-liquidatable, interest-free, that I'm going to now stake back on the ore protocol through my borrow. That's a stack. And 500%, I don't know, how many years does it take at 22% to get 500%? I know you're the math guy, but 22% compounded annually. How long would it take to have a 500% return? Years. I don't know how many.
Mm-hmm. Yeah.
The idea being that me as an ore holder, and I keep picking on ore today because I like it. I've got some. Me as an ore holder, I have the option to take my ore, and assuming it's not unrefined, and I go stake it in the ore protocol, and I get 22%. I think it was last I checked. Or I could take it to NAV ore, buy it, borrow ore against that NAV ore, and take that and stake it. And every time the floor ticks up, every buy, sell, borrow, or period of immense demand where you start to see the stair step, every time that happens, weekly even, in the early days especially, I can just go and borrow more ore, and then take that and take it off platform and deposit it into their staking contract. All that to say, to compound growth long term, add staking rewards or net out a much, much greater APY. Samsara unlocks some really incredible opportunities. Yeah. And every single one of these tokens, when it gets listed, starts at $1 worth of token. So it's like a TGE. When you come to Samsara and you see a brand new token that's going live, it's as though that token's never existed. It's this new derivative of Bonk, of MSOL, of JLP. It starts at $1. The first one is minted for $1 worth of MSOL or $1 worth of Bonk. And the reason we chose that was so that as you see the dollar value here below price, you say, oh, NavBonk is trading at approximately $15.48. So it's up approximately 15.48x since it launched. And Bonk has gone up in that time. And so you see this multiples less than that 15.48. Bonk's gone up a bit. So this is all meant to be relative to Bonk. But point being, every one of these tokens that lists gives everyone holding that token a chance to be early to the next amplified derivative. Positive skew amplification is a term I've been writing with this week, where it's amplified to the upside in an unlimited sense and amplified to the downside in a limited or bounded sense, as we've discussed today. So very cool, very exciting. Mainnet live soon. Keep an eye out for us at Breakpoint. We're going to be at a lot of events. I'll be at a lot of Monkey DAO Super Team Canada events or Super Team Everywhere events. We're actually going to record a podcast there, you and I. We're going to sit down and just shoot the beans on a couch. We bought a booked a studio. If any of you are going to be at Breakpoint in Abu Dhabi, please hit us up in Discord. We'd love to chat, take you through it, answer questions, hang out, grab a beer at a licensed location, not in the streets. It's going to be a great time. I've never been there. I've been to Dubai, I've not been to Abu Dhabi, so I'm excited to see you and get you over there, Monsieur Sid. I feel like that took us into the top and a half of an hour. You feeling satisfied with our demonstration today? No collapse, no breaks, nothing major anyways. I know you got a few things there.
I am feeling satisfied.
Good.
Yeah.
Me too. And I see Sahan in the Discord trying to doctor an image and claim his 50K prize. Nice try, bro. Nice try. We see your ink. The fake claims have already started rolling in. He's one of our.
Why did I try to change the UI live? Yeah. I fixed the selfie, but I made the whatever.
Yeah, to your credit, it all went down the exact same way as the last one, which is just an honest inclusion of fees. But we've got.
You have to add the fees back in when you're selling. You have to subtract the fees back out when you're buying. While we were talking, I had that backwards. Whatever.
There you go.
The floor holds.
It's been an interesting week. The floor works.
After this is over, I'm probably just going to go back to the honest UI, which is this is what you paid, this is what you got. We take the fees out of it.
Yeah. So look,
it worked.
It worked. We've got some nice data here emerging. The line charts are still going bananas as people do this. We've got candles coming. I gotta leak it. I gotta leak the candles. You talked about it. It's something we've always wanted. It's something we've always imagined. And as the line chart is all over the place today as people buy and sell, I just want to point out that the candle bros have won. And what we're imagining is market price in candles. So you'll see every single wick, every piece of data, more data rich. Floor price will stick to a line, and then the price of the underlying asset, in this case, Bitcoin, will be a line and likely a little more imaginative. At this point, from this scale, it looks rather flat. But if everyone knows Bitcoin, it is anything but flat. And so this is going to come to life in a real big way over the next little bit of time here as Sid just keeps digging into this thing and taking feedback from the Discord as we get ready to launch this thing for reals. We didn't even talk about the earn page today. Probably late in the game to get into that. I think a lot of people know how this works, but for those who don't know, we'll just briefly say that if you stake ANA tokens.
Oh my goodness. Yeah, why aren't we looking at that? All the revenue that
I know. I just jumped from 5K to 12K. So I've got some testnet Prana. I've got real Prana too, but this is just the testnet. And I put 500 of it into the NAV BTC market. So I own 35% of the revenue that goes to the Prana holders. And the Prana, it's not for nothing. You have to buy and hold and stake ANA for time to earn this. And you also have to govern, or you don't have to, I guess. But governing all the protocol metrics, fee size, all these things are governable, weekly epochs, ticking higher and lower. And for your trouble, you get paid. In this case, I got paid 1.13 Bitcoin. So a portion of those fees goes into the floor, as we've been talking about, and a portion of those fees goes to Prana stakers per market. So on the Bitcoin market, I've got 35%. On the OR market, I've got 20%. And so if you want Prana, the only way to get it is to buy and stake Ana back on the Nirvana app. And a new staking portal and a new market to earn revenue from emerges every time we list a new asset. So the scarcity of Prana will increase in that sense, or the demand or utility, because every time someone tries to move Prana into their Samsara market of choice, they have to withdraw it from the Nirvana app, increasing the pro rata share of everyone back home on that app. So yeah, Prana is about to get real spicy when this thing goes live. And from today's event, and since 2 days ago, you can see, yeah, it's just DevNet, testnet, but a nice model to show how, on the JLP market didn't get much love during this demo, I don't think. It was up to 38% ownership, only $710 of revenue. It seems like Ore was the favorite. Yeah, we got the same thing here. About 3K on MSOL. 7K on Bonks. Okay, got more love than we had initially thought. And you just get these nice metrics showing, the total revenue, your share of the revenue, and a beautiful portfolio page that was live and is now back under construction for a moment while we integrate some of these new metrics. And that's going to be a really nice place where you can go and just see all your holdings, the rewards that have accrued from your Prana, NAV growth, multiple since buying, all these fun things. Really appreciate your guys' feedback this week. We've got a lot of killers in the Discord that are just sharing fantastic ideas that I promise you, most of them, well, all of them are reaching Sid's desk and the other developers. But most of them are going to get integrated. There's a lot of really good ideas coming through. It'll just make everything more intuitive, easy to use, and sexy. So for those of you who came to see the break, I'm sorry to disappoint once again, but the floor holds, infinite bid. I think someday we should just bot this thing and send it up with $1 billion so we could actually sell 100% of the supply.
Yeah.
And we'd lose some credibility by having not we have full control, so everyone didn't get to do it themselves. But at the same time, I just want to see 100% of the supply get sold. The cool thing is the first one bought after that is bought at the floor price, right? The token doesn't disappear. There's just none of them left. And the game continues. It starts anew at that new higher price. So joy. Excited to see this thing come to life. It's been a fantastic journey of growth on the DevNet side. I think the latest additions here. You want to talk about, last thing, ARP. We didn't touch on ARP. You've created a new metric. Does not exist until this day. For those of you who can't read on the zoom in there, it's annualized revenue per Prana. What does that mean?
The revenue goes to two places. Goes into the floor, goes to the Prana token. Prana tokens are the governance token of the Nirvana ecosystem. And in the Nirvana style, you only get Prana tokens because you work for them, you earn them. They also are not distributed to insiders or whatever. You get them by buying and holding Ana. It's basically the amount of Ana you have multiplied by time. Prana tokens work for governance and rev share all over the place. They work for revenue share and governance on Nirvana. Same thing with Samsara. And the important thing is that it's zero sum. That there are only so many of these tokens in supply. The rev share that you get is not platform wide, but it's where you choose to allocate your Prana tokens. So if you put some Prana tokens into this Samsara market, you earn revenue from there. If you put them into another one, you'll earn revenue from that. And the revenue is shared pro rata to all of the tokens deposited in there. The ARP figure is the annualized revenue per Prana token. Looking at all the revenue that the market has been sending to the pool of Prana tokens in there, you can annualize it. And you can figure out what it is pro rata. When you're looking at this, you'll see that the ARP for CBTC, that's over $1,000 a year to each Prana token. Now, why is it like that? There's a lot of variables that go into it: the volume, the fee rates, and the amount of Prana tokens in the pool. I'd expect to see this kind of even out as people distribute their Prana here and there, but not exactly, because you might not want revenue in BTC. You might want Sol. And so that's where you allocate your Prana tokens. There'll be the competition is that more Prana allocated to one market shares out the revenue to a bigger pie, or more slices of the pie, I should say. And the ARP is then updated depending on how much revenue is actually going there and how many Prana tokens have their hands open to receive it.
Oh, that's a good point. Yeah, the volume could spike. ARP should spike with it. But if the amount of Prana staked into that pool spikes, that would have a negative impact on ARP.
ARP would go down.
Yeah.
In a way that this works, maybe if you're familiar with depositing money into a borrow lend to earn interest, like Aave, or providing liquidity to an AMM like Uniswap or Radium or Orca. It's always the amount of money divided by the amount of providers. You put in more liquidity into a Radium pool, an AMM. The fee revenue didn't go up. It's the same trading volume, but there's more people to split it up among. Same thing with Aave. You can lend, but if the number of borrowers don't change, the interest rate, the yield will go down. There's a balancing that goes on. So the same thing here. You put more Prana in, it'll get divided up. But this is very competitive, that you have a dozen Samsara markets and Nirvana, and the Prana will be split up among all of these as they're fighting for their share.
Yeah, I imagine with the SDK going live and released and the API access, like the first product, the most obvious product that I would build if I was a dev, shout out to any devs watching, is some kind of Prana optimizer vault. And that's going to make for an interesting dynamic, right? I mean, assuming it would auto balance, it would track volume. It'd say, hey, there's a hot new listing. This thing's getting a ton of volume today. I'm going to move over there. Hey, everyone just moved over here. It's gotten nuked. I'm going to go back. Like moving around manually is what I'm going to be doing. But somebody that took a fee off the top of their Prana and just had a big vault that people could stuff it into that would just place it in the most optimal thing at all times, I'd pay a fee for that. So I imagine we'll see something like that. And ironically, that's probably just going to flatten out the competition, right? And so it stays like any market maker and arbitrage does. Price of Bitcoin across every exchange ends up being close to the same over time. Yeah, we might see something like that as efficiencies get squashed, inefficiencies rather. Anyways, lots of products that can be built around this primitive, and I think a Prana optimizer vault is the most obvious one to me as we get into the tens and then hundreds of markets trading here. It's going to get spicy. Of course, that totally ignores the fact that those Prana are also used to govern. A minor detail. If you want to increase the fees, if you want to decrease the fees, if you want to increase or decrease the borrow rates, price curves, all these various metrics, you deposit your Prana and you take your votes. And the weekly epochs, all those metrics I just mentioned and some more, they tick higher or lower. So complete control for the users on this app per market. Oof. I could talk about this stuff all day, but we're at an hour and a half in. Yes. I imagine you would like to get back to deving. You've probably got a few ideas that popped up during this demo. So,
oh my goodness, I can't help myself. This is yes. Let's close it here. Yeah. I have a dragon display.
Okay. I appreciate it, guys. Everyone who stopped by today, participated in the your wallets have been whitelisted. So first market live on Samsara will have a 24-hour window for you to act exclusively on that market. And for anyone else, there'll be a breakpoint, of course. Hit us up. Until next time, we'll be back 2 weeks from now. 2 weeks from today.
That's right. Thank you very much.
Here.